Hi there, welcome to Grain TV. It's Wednesday, December 7th, another mixed day in the markets. Let's take a look at GrainEdge's trading platform and see where we closed. In Chicago, corn was off 2.25, closing at 358. Beans closing almost at 1050, gaining 2 cents on the day. And wheat in Chicago was the big mover, losing 4.75, moving down to the $4 mark. News today was pretty light. There was some EIA ethanol numbers that were fairly supportive in terms of higher production, but overall today really just sort of felt like a day of consolidation after big days of gains, especially in corn. Starting the week and in beans as well. So, there continues to be strong demand out of China. We got another export sales announcement this morning, this time a 330,000 metric ton deal to China. Most of that, however, was for new crop 2017-18, or 264,000 of the 330 that was announced, only 66,000 in 2016 old crop. On the other hand, there was another 136,000 deal to unknown destinations, so that brings the daily total up to 200,000. When you combine that with 2 days in the past of 400,000 each day, that gets us a grand total of nearly 1 million metric tons for the week. So overall, it's been a relatively good week. Crush margins for livestock or for soy meal processing, because the livestock are really strong in China. Soybean meal in China is carrying a premium for spot delivery, so there's a sense of urgency in the marketplace there to satisfy the strong demand, and that really is sort of keeping this soybean market afloat, even as we carry large stocks in the U.S. and an expectation of big supplies coming in South America. Speaking of South America, as we look at the weather, Brazil continues to be pretty much ideal. The dry parts of the central part of the region are continuing to get rain, and the outlook for more rain to come. On the other hand, South and Southeast Argentina are seeing some dryness, and the models are showing even more dryness as we move forward. Maybe not enough to really spark this market at this juncture, but it's certainly enough to maybe keep some traders from pushing this market substantially lower. So, there is sort of a question mark in Argentina in regards to production. But on the wheat side, everything is coming up bears. And that is, this week we've had Canada with bigger than expected wheat production numbers. We've had Australia with bigger than expected production numbers. And we have Argentina's crop being harvested, and they are really dropping their bids aggressively in the world market to try and move it off of the combine. And so, that really is taking its toll on wheat, and I suspect wheat will continue to move lower until we get some signs that there is going to be some supply changes. Right now, we continue to see big stockpiles, no real signs of production problems or production cutbacks in terms of acreage response in the world market. Speaking of numbers, supply and demand numbers, we will see Friday USDA's latest supply and demand forecast. Those numbers are expected to be no real significant changes. It's not a survey-based forecast. The next time the USDA will do a survey of U.S. production will be their final numbers coming in January's crop report. Let's take a look at action today in corn and soybeans. In particular, we saw today just really felt like a day of consolidation. We traded briefly again above 360, but we're not able to hold it for most of the day, and so we closed well below that 358. Again, that trend line was a temporary thing that we broke yesterday. Weren't able to close above it. It still remains as overhead resistance. Likewise in beans, much less activity today in terms of volatility. Generally speaking, this week we've seen really strong overnight markets, and then the day market gets faded a little bit. But today was sort of the reverse of that, where the overnight action was actually negative because palm oil was off for the first time in several trade sessions. So we came in to a lower start to the day and managed to close only a little bit higher, about 2 cents overall. Yet again, we continue to sort of have this tug of war every time we get up to these junctures in the mid 1050 range. So I think it's going to be hard pressed to get above that without any sort of significant weather spark from South America. So stay tuned for that. Again, Friday, the crop report coming out, that may have some volatility as traders respond to those numbers. But overall, continue to expect sort of more back and forth here as we get into the end of the year. That's all we've got for today on Grain TV. As always, if you'd like to learn more about how we can help you in your own grain marketing situation, visit us online at grainedge.com. Take a demo of our free trading platform. Also, take a look at our morning commentary and our technical alerts to help you in your own personal grain marketing decisions. Have a great day.